All right, as we can see, we're still in a nice steady uptrend. And I've been commenting here this past week that a lot of people are private messaging me and saying, why is the market going up like this? And my answer is always the same. I have no idea. All I care about is being able to analyze that it's going up. Now, my theory is that as long as our representatives in Congress and the Senate can't get anything done, that's good for the economy. That means they don't have the opportunity to screw things up. So as we can see in the Dow, when it came up here and tested the Dow tested the 50 with a Morningstar signal and gapped up through, we just have to assume we're in an uptrend until we see a sell signal. Same scenario over here on the NASDAQ. We had a good inkling there was going to be a reversal when we saw the setup for a bullish flutter kicker signal. So that made us immediately, FT, yes, we are showing charts. Are you on screen sharing versus slides? All right, good. And over here on the S&P 500, this is where you can visually recognize or enhance your analysis of what other people are looking at in Western analysis or Western terminology. Your kind of inverted head and shoulders, which the Japanese rice traders call the three valleys. But we can see where the uptrend started on the third valley. A best friend gap up off the T-line, and then a gap up through the observable resistance level, and that with a inverted head and shoulders or three valleys pattern setup. That just enhances our ability to see that that pattern is working. So the one truism, not one truism, a truism is the market's going to go up, the market's going to go down. So what do we want to try to do when we know the market's moving in a specific direction? Obviously, we want to find the strongest signals and patterns that are going to be enhanced by being in that right direction. And that's kind of our prelude into, or our promo into Saturday. We're going to be doing the full day training on the top ranked signals and patterns. And this is just a very clear training observation practice to say, all right, when we see these 18 signals or patterns, what we call the top ranked signals and patterns, we know that we have an extremely good probability that prices are going to move in a specific direction. So just like we see right here, where you have your best friend signal, anytime you can identify that best friend signal, at least we know, and the reason I point out the best friend signal, out of the 18 signals or top ranked signals and patterns, I put the best friend as number one. And there's going to be three elements of why a signal is good. One, the probabilities that it's now heading in the right direction or the expected direction. Two, the magnitude of the move. And three, the frequency of that signal or pattern. So we always get the question, isn't the kicker signal stronger than the best friend? The answer is yes. But or every time you see a kicker signal, you might be seeing 6 or 7 best friend signals. So anytime we start seeing these signals, our recommendations are based upon doji gap ups, and then we can start adding our other enhancements like gapping up above the T-line. Or if it's setting up a pattern, like our recommendation on, well, come on, what's going on here? Recommendation on BEKE. You can see where the best friend started this uptrend. Then it was kind of hesitant in here. I say in here, right about where that resistance level is. And when we saw it gap up again doing another best friend signal, what can we conclude, or what can we visually recognize? Obviously the fry pan bottom J-hook pattern. That told us there was an extremely strong probability that we're now in the next wave to the upside. So again, this isn't rocket science. This is basically identifying anytime we see signals that we know have a high probability result. Our recommendation on mine was doji gap up, still in a nice uptrend. We saw that same thing in Bidu. There was a gap up, and then there's your breakout best friend going into the next wave. So anytime we see that high probability trade, that's the reason we recommended Cano today, was there's your best friend signal. Now, that becomes your initial priority. Now, let's see if that's the right word. Your prominent indicator. Now we can start adding everything else that we know. Darren, are you not watching what we're doing here? A best friend signal is a doji followed by a gap up. That's your best friend. That's what we were pointing out on all these charts. A doji followed by a gap up. So if you break down each signal into the description of that signal, what's it telling you? Telling you got indecision, and then bam. They are telling you that there's a lot of investor sentiment decision, or telling you which way they're going. Gap up, but more than that, isn't it? Magic, what do you mean by that? Oh, you could add, if we know the signal is your basis, that tells me, all right, this is a strong signal. Now what else can I add to that analysis? Well, they closed above the T-line, 1. 2, they did a double bottom. 3, stochastics heading up. That puts everything in the probability factor that we're heading higher. Now, how much higher? We don't know. We just know the probabilities are that it's heading higher and has good probabilities of moving with a good magnitude. As we saw over here, when we first recommended LPI, there was your doji gap up, off the 200, through the T-line, confirmed the next day. Then after that, the analysis remains very simple. Didn't have to do anything with this until they basically closed back below the T-line. Doesn't the gap up of the best friend have to be above the high of the previous? Yeah, that's the gap up. What was Saki showing us today? Is it this one? No. Was it UCLL? Darn, I can't remember which one he was showing. The T-line, David, is the 8 exponential moving average. That was the one we were illustrating that was a, oh, maybe I did this wrong. QCTT, no. QCLL, no. It's the 8 exponential moving average. And there's the reason we use it is if you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line. And the reason the T line is a relevant support level is just doing your charts. If you look at your charts, see how often prices come right back to the T line. Now, the reason that's relevant is because nobody has the T line or the 8 exponential and moving average on their charts. So simple logic says as long as you stay above the T line, there's your fry pan bottom breakout, look a little dicey here, but as long as you stay above the T line, you can stay long. When it comes back up, you can always buy back in. JK, JK, JK. Have you read any of the books? There are 6 bullish signals and there are 6 bearish signals. I'll try to show some of the bearish signals. But you've got the bearish engulfing signal just like you'd have a bullish engulfing signal. You've got a bearish harami like you would have a bullish harami. You've got a doji in the overbought condition, opening lower the next day. A bearish kicker signal. So, and shooting star is another one, yes. So, JK, just asking that question means you need to do one simple study, and that is knowing the 12 major signals, which is going to give you 6 longs and 6 shorts. That is the bread and butter, the bricks and mortar of candlestick analysis. Because we know the nature of the trading based upon the formations. We were discussing today how there was some indecision here, and it's now less indecisive here on FedEx, but it was moving up very indecisively. That tells you that it's not moving up decisively, which means you always keep a safety stop because any bad news on that stock or that sector could move it down very quickly. Let's see. Does the T-line have the same effect on the other time frames? Yes. It's all the same. Because if you go back to your basic definition of a candlestick signal, it is the accumulative knowledge of everybody buying and selling during a specific time frame. Doesn't matter whether it's a 1 minute, 5 minute, 10 minute, or a daily, weekly, or monthly. It's still the cumulative knowledge of everybody buying and selling. So going back up to Magic's question, a gap up is a bullish gap up above any of the previous day's trading. That is what is a true best friend signal. Now we're going to be going through all this in detail on Saturday. You might know your signals. Now we're going to put the combination. So that is your best friend signal. Notice the doji. Notice they gapped up well above any of the trading of the previous day. Now that doesn't negate, I'll see if I can find one. Doesn't negate a doji that opens positive the next day, but not necessarily out of the trading range. That's still a bullish signal. It's much stronger as a best friend signal gapping up. All right, let's see. Let's see. Now I got off track here. Kinu. All right, so here is the function of candlestick analysis. Knowing what the nature of the trading was and how it's changed. Today, people in the chat room pointed out the fact that ear was breaking out. Now look what this pattern is, a big fry pan bottom. And look at the nature of the trading during this fry pan bottom. Doji, spinning tops, a lot of indecisive trading. What does this candle tell us? Well, we know that if a doji is an indecisive trading day, and if a doji tells you there's indecision, a series of dojis tell you there's greater indecision. And what do we expect coming out of a series of great indecision? They're telling us which way they're planning to take it now with a new decision. So you'd look for more upside. The same scenario over here on unit. Bunch of series of dojis, kind of a scoop type pattern, but this is where you observe everything that you can put into your analysis. Look when they pulled back at the bottom of a downtrend, right smack dab on the 200, and then look where they broke out, kind of doing a scoop pattern. So what is the observable investor sentiment here? As soon as they hit the 200, was indecisive, and they started bringing it back up, that told us the probabilities were that we're heading in this direction. And going back to that rhetorical question, do all your price moves act big on breakouts or on a bullish trading? Definitely not. But what it does do is the candlestick analysis, seeing when there's a change of investor sentiment, has a much greater probability of having you in these situations than without those candlestick signals. Do candlestick signals teach you to work on currencies like cryptos? Yes. Candlestick analysis is the graphic depiction of everybody buying and selling during a specific time frame. There's no restriction on what that means as far as investor or trading entity. Stocks, bonds, currencies, commodities, tulip bulbs, anything that has fear and greed in it. It also looks like a scoop pattern, yes. So the more visuals that you can put into your analysis, the higher the probability you're recognizing when there's been a change of investor sentiment. So we recommended SGOC today because you can see the big fry pan bottom. Then you can see that it was breaking out. It spiked up, but was very indecisive by the end of the day, not unlike what it's done in the past. So if you bought on this day, what do we need to see tomorrow? We definitely need to see it open positive and trade positive. It's doing the same thing it did before. You close it out and wait for the next buy signal. ES, you could be buying different entities. Whoops. Such as coin. And you can see the J-hook pattern right here, and then the gap up breakout. Next price move. Okay, so we're going to be going through the patterns that have extremely high probabilities of expected results. First of all, you can see the fry pan bottom on SPWR. then you can see what we can clearly recognize to be a bobble breakout. It came up and it hit a resistance level, the 200, that everybody could see. And where did it pull back to? Well, it pulled back right smack dab to the T-line, which nobody can see. But when we add it on our chart and we know that it's a natural support and resistance level, human nature, oh boy, I meant to go into a little bit more detail. When you see a candlestick buy signal to close above the T-line, you can stay long until you see a candlestick sell signal to close back below the T-line. Same scenario on the downside. If you see a candlestick sell signal to close below the T-line, you're in a downtrend until you see a candlestick buy signal. The caveat to that is the further away you move from the T-line, the higher the probability it's going to come back and test it. I'm really jumping around here, but so look at the fry pan bottom that was occurring on HX. Whoops, it's so small down here. But you had this big fry pan bottom, and look where you were up here. That would have been your alert. Be ready to move to your 10-minute chart to start taking profits. And what was the alert? The fact that you were that far away from the T-line. All right. Why is left-right combo better than a kicker? Because of the frequency. And again, these signals and patterns that we're going to be looking at, number 1 and number 18, it's not that number 1 is so much greater than number 18. It's that number 1 is a very good chart, good frequency. Number 18 is still a very good chart. It may not have the frequency. So it's not like number 18 is bad and number 1 is good. They're all good. And what I usually have as a result when we go through this is people say, well, if there's so many of these good signals, I can't learn all these. And I always recommend learn 3 or 4 very well so that you become an expert at them. You know when to buy, when to hold, when to sell, when it's working, when it's not working. Now what happens is you are now in control of your own investment practices, number 1, and you're definitely in control of your investment emotions. That was always my big bugaboo, was I was the worst investor in the world because everything I did, I traded off emotions. And so everything you see in candlestick analysis is a process where you can eliminate having your emotions in your trading process. The brown one, let me go, yeah, the colors on this tonight are off a little bit. I don't know why. Let me see, I gotta see if we've got one. So the blue line is the 50. This red line, which looks like I've got a couple of colors in there, is the 200. These are simple moving averages. The black line is your T-line. The light green line is your 3T line, which works in conjunction with the T-line. And then I've also got the 34 EMA, which works reasonably well. I don't have the answer to that, Bernard. No, the T-line is just, it just works very effectively. Oh, that's where I was trying to get to, is that if the T-line acts like a natural support and resistance level of human nature, and the graphics, the candlesticks, are the illustration of what's going on in investor sentiment, when you combine those two, you've got an extremely powerful, high probability trading platform. Oh, let's see. There's that the 200. I don't know what the heck this is. Let's modify that. That looks like the 21-day moving average. I don't know why that's on here. Ah, something's goofy's happened here. Anyways, you should have the 50, the 200, and the reason you have those is because everybody in the world uses those on their charts. We don't use them to make our decisions. We use those to see what everybody else's decisions are doing. Okay, so there must have been something goofed up. There we go. Okay. Sally, I will let Abraham know that you're having problems. And if he's not answering you, which he does for everybody, all right. Okay, now we're way off track here. All right, so what we're trying to do is find the highest probability trade setups. So when we see something like this, what's that tell you? There's been a dramatic change of investor sentiment. We'll do that one more time, Sally. Okay. And now we know, because there's been that dramatic change of investor sentiment, that more than likely things are going to be a lot more active. So what do we see right now developing? Well, they've pulled back. Now there's a good prospect of either doing a J-hook pattern or a 45-degree. There you go, Marcelo. So the nice thing about the T-line is it affects or enhances your visuals of a pattern. You can see the big fry pan bottom setting up here in ASAM. It also kind of illustrates a wave 1, wave 2 going into wave 3. It also shows us using the signals kind of had a doji sandwich near the breakout area, which implies there's going to be more upside. So this is again putting 2 plus 2 together and seeing the better, or getting a better probability factor by adding all that information together and being in the right place at the right time. What is situation? I think this is a problem with Steve. I don't know whether, Abe said he was looking into why you weren't getting stuff. Allie, just hang on to yours until we do the double line. On Ninja, do I use double stochastics with 1233 is what I use. Does a fry pan bottom take about 5 to 7 weeks till a breakout? No, it's just identifying a big rounding bottom. It could be 3 weeks, it could be 7 weeks, it could be 4 months. It's just the rounding bottom, and you're looking for what happens right here. Either it's going to break out or it's going to fail. If it fails, you've got a double top. If it breaks out, you've got a fry pan bottom breakout. So what we really like to get stuck in is patterns that we recognize. So notice how when they came up through, this is a very easy, I want to say, price movement evaluation. What happens when they break out through a resistance level? They'll come back and test it to see if it's going to act as support. We can see what type of signals they were doing or what type of activity. They were showing buy signals right smack dab on the 200. And then it started trading positive. Where could we be buying if we were watching this trade setup? We're buying right here. What do you think the investor sentiment is when it comes up through a resistance level and then pulls back? Everybody's waiting to see if that resistance level is now going to act as support. And as soon as they think it's acting as support, they get a lot more confident and they start buying. What we can see more instantly, I guess is the right word, is we can see when they're supporting, what they're doing down here, and knowing that they're getting ready to start buying based upon it supporting off that level. So the graphics, the candlesticks, just make it much easier to see what investor sentiment is doing at specific levels. Wave 1, Wave 2, Wave 3. And where was the selling on Wave 3? I hate that thing. Look at our evening star signal. That was telling us it's time to take profits. Now what's it telling us? Well, they can't close below the T-line. So where could we be buying this? It comes back up through this level, because what would that tell us? Now we've got another Wave 1, Wave 2, J-hook pattern, Wave 3. So this is why knowing the patterns and knowing what signals are occurring give you that much added insightfulness of what's happening as far as investor sentiment. David, nothing you can do on DWAC. It just took off like a scalded dog. And so if I was trading that today, it's a new offering. So the only thing you could do, how do you trade something like this? That's, again, going back to your time frames. This is your 10-minute chart. You can even go down to your 5-minute chart and say, whoops, it was trading up, and then they sold it off. That was when profit taking. And notice what happened when you saw your first major profit taking. They took it up and down, but it was pretty much at that level where the bulls and bears came into contention. Yeah, so that's a whole different trading mode. If you're trading a big mover like this, trade off your 10-minute chart. That is a bullish engulfing signal, yes. That's exactly what you're identifying. The fact that it came right back to the T-line, now it's doing a bullish engulfing signal. So with that knowledge, they're buying off the T-line. And then with your knowledge of patterns, what could that be creating? Could be creating another J-hook pattern, which means if they came up through this level, expect another price move of this range. Prepares you for what's going on in investor sentiment. Oh, is it up even further? All right. Okay, so this is knowing when to be buying. And remember what we said the other day when we saw this move? Exuberance at the top, and look how far away you were moving from the T-line. What did you see the next day? There was profit taking. But now what's it telling us? Well, they've done a little consolidation. Now you might have a J-hook pattern. All right. And so when do you close out a trade? When it closes below the T-line. When would you have closed this one today if you were long? As soon as it opened lower and started trading lower. Because what do we know about our doji rule? That it's going to move in the direction of how they open, which meant it had to open positive. You use Larry Williams indicators? No. I don't use them. I use candlestick signals. If there's an indicator out there that you know everybody's using, like Fibonacci numbers or Bollinger Bands, anything else that everybody else is watching, we have a much better perspective of what's going on at those levels based upon the signals that are forming at those levels. So this is where you add 2 plus 2 together. You see a doji, Sitting right smack dab on a technical level. What do we know about the doji rule? It's going to move in the direction of how they open after a doji. If it opens positive, what kind of pattern can we expect? A doji sandwich, which means it's probably got a good strong move ready for it, and it's telling us that everybody sees it's not resisting at the 50 anymore. Same scenario on the downside. Las Vegas Sands, bearish left-right combo, a bearish left-right combo, and then followed by a doji. What do we know about the doji rule? If it opens lower tomorrow, you can be shorting immediately because now you've got sell signals right at the 50, which has been acting as a resistance level. It opens lower, you've got a bearish doji sandwich, and what do we expect from a bearish doji sandwich? More downside. So at least we have some prospective targets. First target is to see if it hits this support level. Second target, seeing if they're still in a downtrend. So again, this is not rocket science. This is just identifying what's going on in investor sentiment, telling you when a pattern is good and when it's time to get out. So there was our scoop type pattern on OCGN. And then there was your big bearish engulfing signal. Told you they took the wind out of the sails. Then they started buying again down here. But today they sold it off. So what's this chart telling you right now? Pretty much telling you don't want to be in it because you don't know which way it's going. And the nice thing about scanning for candlestick signals is on any given day, in less than, even if you're learning what you're doing, in less than 20 minutes, you're going to find 5, 10, 15, 20 good bullish or bearish signals. So if you've got something where you can't tell what it's doing, take that money and move on to something else. Hold on to your individual ones until I tell Jim to do the double line. We've got a lot more to be looking at here. Tesla. I think one of the little perks we're going to do on this weekend's training, which is identifying the top-ranked signals and patterns, and then putting some simple option strategies to the right trade setups, that if you come to the Saturday, we're probably going to give people 2 weeks free to the options room. And the options room is fun and interesting because we have people like Nora who got into this early in the day and made 600 and I think she said 659% on that trade. So, and she's a very good trader. So this is where you learn a lot faster the terminology and the strategies for trading options. Kevin, the double line is you don't put in an individual stock request until I tell Jim to do the double line. When he does the double line, then you put in your stock request. That way we're not stopping and doing them as we go along. How many options do you tell on a day in options room? John, a lot of days it might not be anything because there's nothing out there that looks good. 2 days later, we might be looking at 3 or 4. So it's not a number. It's picking out the situations that what the market is giving us. Courtney, very simple scanning techniques. Whether you're using TC2000, Metastock, whatever your scanning software is, that I can go through a scan, in my case, knowing what I'm looking for, in less than 10 minutes in the afternoon, I can find the best 3, 5, 10, 15 charts so that I can narrow it down to the best 1 or 2 for the next day. Hope it is based on your patterns. Oh yes, that's exactly why. Yes, that's the whole point of the options room, is if we see a candlestick signal or pattern, we go after the figuring out which is the best option strategy to take advantage of that signal or pattern. How do you plot the T-line? It's the 8 exponential moving average. You put it in just like you would the 50-day simple moving average. Kevin, you can email Abraham at candlestickforum.com, and he can give you the options or the options room. That's kind of a redundancy. So NVIDIA, look where you had your best friend signal breaking out to the upside. Amazon, not anything great right now, but look at your bullish doji sandwich breakout of the 200. What's that imply? That you were in an uptrend. And Apple, look at your Morningstar signal, kind of your double bottom. I don't know what this line is, so we'll get rid of it. So what's Apple telling us right now? You're in the overbought area, but you don't have anything showing any selling at this point. Here was your buy area after the Morningstar signal. So who was asking? There's 12 major signals. A Morningstar signal is one of those 12 major signals. Very, very symmetrical. Big down day, a day of indecision, and the third day closes more than halfway up this candle. And this is where you can add benefits to your analysis. A gap up on this side shows strength. Closing well above the halfway point of this candle, more strength. Closing above the T-line, more confirmation. That's why this is categorized as one of your 12 major signals. Any chance we'll ever move over to Zoom video for these classes? I don't know what is the advantage of a Zoom video. Let's see, on a Zoom video, I don't know if there's the benefit of being able to ask questions. Okay, so some of the charts right now that are looking attractive. There's your big left-right combo. Zoom looks way better. All right. Yeah, you wouldn't be able to ask questions. So. Unfortunately, yeah, we have, don't worry, in the last X number of years, we've tried to find the best webinar type softwares. Unfortunately, as bad as this is, it's the best one out there for taking, doing everything that we want to have, is having people ask questions, people chatting back and forth to each other, that sort of thing. How much room do you give a candle pulling away? Oh, the first thing you're doing on any buy situation is the signal itself. Remember, the T-line is just your confirming indicator. So if I see something like this, notice you had a left-right combo, and today you had a bullish trend kicker. All that implies there's more upside. Okay, let me get through some of these and then we'll get to the mechanical questions. So here's observe the obvious. When you can see a fry pan bottom setting up, where do you expect the breakout to be? Right in this area. And what happens when we see a fry pan bottom breakout, especially when there's a major technical level, we know we can be buying early, because as soon as it goes through that resistance level, what do you think everybody that's watching that resistance level, they're buying now that they see that it's not resisting there anymore. We just have a much better heads up to get ready to go after it before everybody starts piling in. So the probability factor is, if you see a best friend signal, there's more upside. Where would you suspect the first target to be? Probably the top of this channel. So at least you know you could be buying and heading in the right direction. Frank, that's why we do the double line. AMRS, a best friend gap up through the 50. What's that tell you about the 50? It's not acting as resistance anymore. Now what do you watch? You see if it can get through the 200. No, you didn't hurt my feelings. It's just we tried to research what is the best. We know this format has problems, but it has the least of problems of all the other chatting services out there. Is this an island reversal? No. An island reversal is where you can see an area that you could draw a circle right around. Let me see if I can remember one. Well, somewhat of an island reversal. Net. Darn, I can't remember where the other island reversals are. I'll see if I can come across it as we're going through. LEV. Now, why is that not coming up here? Nope, going right on. QCOM. There's your strong bullish flutter kicker signal. Now, the alert for a bullish flutter kicker signal is pretty easy to identify. They gapped up at, in this case, near the previous day's open, did a doji, and now, what's our doji rule? If it opens positive, it's going to trade positive. So if you took out this little flutter, you've got a kicker signal, which is your strongest reversal signal. We saw that again over in the NASDAQ when it gapped up. Make this bigger so we can see it. They gapped it up at the previous day's open and finished positive. That gave us the prospects of a bullish flutter kicker signal. Where is the best friend kicker? JK, we've got the 12 major signals training package in the members area. And we've got the top ranked signals and patterns, but we're going to be doing that live training again this coming Saturday. Oh, for crying out loud, why is that not coming up over here? That was going to be a good segue. I don't know whether I've got this on target or not, but you can see a bullish flutter kicker. A down day, they gapped it up above the previous day's open and went positive. There's your bullish flutter kicker signal. That's a strong reversal signal. I don't know why it's not coming up on this service. Well, something is going on here. Huh. So this is your message. Your message is, you can see the fry pan bottom type pattern, then they gap it up. But it's not a very pretty picture. They open it up here and they closed it down here. Not anything you want to get into. However, what was the message? The message was they were getting in with great enthusiasm and then taking profit. So what do we look for? When the profit taking is over, that's when you can start buying, because that tells you the enthusiasm or that bullish sentiment is now going to be continuing. So that's a high probability trade setup. I don't know what's happened there. Maybe I'm typing it wrong. No, that's not what I was looking for. All right. Here's another element that is very effective. Why do candlestick signals work so effectively, telling you what's going on in investor sentiment? Because we can see is missing the S in the display stock title area. Yeah, I don't know why. Sometimes there's some signals that do not come up over here in CQG. But observe the obvious. Look at your morning star signal occurring smack dab on the 50. What's that tell us? People are buying here at the 50. Where's a good place to buy? If this opens positive tomorrow, it's confirming our morning star signal and telling us they're supporting off the 50 and that the T-line is not acting as resistance. Is one of those I wish I had options. Well, get ready. Is this? I'm pretty sure this is optionable. And so, but this is the whole point of the analysis. Where is it time to enter trades at the optimal time? So this is where you might be buying calls on positive trading. Now, this is what we're going to be doing Saturday. Is if we see something that is doing what we expect it to be doing, I'm going to do this. I might be buying calls right here because I expect, what would you think the next target's going to be? Up here at this level. Well, when it starts doing this, what do you think our next target's going to be? Still up here. So this might be, we're buying calls here, and then as it's getting in this area, we might be doing spreads, which means we don't have a whole lot of money in that trade, but if it works effectively, the return is going to be extremely strong. Oh, okay, so ACY doesn't have options. How long would you be waiting to buy Ruckus or Rudis? Now, I would be looking at it now. Saying, all right, the profit taking's over. I'll be buying this one on positive trading from here. That's the whole point of this, recognizing a message, is when is the profit taking over. Oh, we're already at 9 o'clock and we're not halfway done. All right, get your coffee out. Here we go. Same scenario. Look at your series of dojis. Now you're trading up above the T-line. That one now produces a very high probability that you're going to be in an uptrend. And where would you likely move to? Probably the 50, which would coordinate with filling that gap. So not only do we know when it's time to buy, but we can kind of calculate what the target might be and whether that target is worthwhile. If this was a 4% move to get up here, probably wouldn't spend your time and effort making 4% on a trade. If this was 22%, yes, that's much more worthwhile. Observe the obvious. There's your J-hook pattern. And when the J-hook pattern confirmed, what did it tell us about the 200? It wasn't going to resist at the 200. What's our expectation now? Wave 1, wave 2, wave 3, the same magnitude as wave 1. So if I was buying calls on this one and saw it was trading right here, I would start buying calls. Now, if it ran for another 2 or 3 days with the expectation we were moving like this, maybe I'd do a spread with a little money exposed. Those are the type of strategies that you can use knowing what the expected price move will be. One of the top signals and patterns that we use is the inverted hammer. That signal right there. And the reason we use that is I put that in the category of being one of the 12 major signals. The reason is that through the years, which I'm guessing is now getting close to 40 years, that anytime you see an inverted hammer and bullish confirmation, and again, this is just my own observable statistics, nothing mathematical, but there's probably about a 95% probability or greater that you're going to be in an uptrend. So anytime I see an inverted hammer, I will take notice of it immediately, because if you see an inverted hammer and bullish confirmation, that's a very high probability strong reversal. Now I know a lot of people are watching Peloton because they've got screechy commercials, but you can see that it gapped up. Where do you think your first likely target's going to be? At least a 50. Is there a minimum float for a stock to be optionable? John, I don't know. No, I think it's more of a process of a company paying the fees to have options on their stock. So the float or the volume available isn't the main criteria. Now, if I am trading options on something, I usually want to see it trading at least 1 million shares a day, because anytime you start getting below 1 million shares, a lot of the option volume or the open interest is very low, so you have a hard time getting in and out of those trades. What if the inverted hammer is in the middle of an uptrend? A signal is not a signal unless it's at the appropriate part of a trend. So just because you see a signal somewhere midway in a trend, that's just a formation. It's not a signal. What do you use the 30? It just works reasonably well. Meaning, the nice thing about candlestick analysis is you could take everything off this chart and you could trade relatively successfully with the candles themselves. But anything you add should add some enhancement to that. And so as you can see, it's not a very cluttered chart, but the main criteria for making a decision is the signal itself and then seeing what the other indicators are doing to confirm. Interesting comparison of AUPH inverted hammer to Peloton hammer. Same spot above the T-line. Does Peloton have an inverted hammer? Well, type it correctly. Yeah, there's no inverted hammer here. That's a doji. An inverted hammer is pretty much seeing the body at the very low end of the trading range. And then there's only one formula that you have to know in candlestick analysis, and that's the number 2. In this case, in an inverted hammer, the shadow to the upside needs to be at least 2 times greater than the body. Oh, what did I have this one on here? This one was supposed to illustrate something. And I don't know what it is, other than it was a nice J-hook pattern. So if this was wave 1, that would imply that wave 3 was not going to stop at the 200. Land's End. You can see the rounding bottom. You can see the doji sandwich. What do we know about a doji sandwich? It implies there's going to be more upside. If there's more upside, that means this pattern is still going to be working. And then when you can add two patterns together, there's your morning star signal, followed by a doji sandwich. We know the morning star signal is one of your 12 major signals. It implies there's a reversal. There's going to be more upside. The doji sandwich implies there's going to be more upside. So when you put them both together, that's a double criteria for more upside. So we call it a McMuffin because it's your morning star followed by a doji sandwich, or your morning sandwich McMuffin. Now, if you see it on the bearish side, we call that an evening star signal followed by a bearish doji sandwich, or your evening sandwich, we call that a dagwood. Just clever names as we're sitting here all day long. So this is Zillow Group. And what do we have for a 2+2 analysis? Well, there's your bullish engulfing signal. There's your doji sandwich. And there's your close right about the 50. So what could we be expecting? Well, if we know there's more upside from a doji sandwich, if this opens positive and trades positive, what's that tell us? Now we've got a bobble breakout. Is Zillow a McMuffin? No. That's just a bullish engulfing with a doji sandwich. And Posh. Big fry pan bottom. Where was this breakout relevant? Well, right about where it started, and what was also added to the breakout. The fact that if it goes up through the 50, we're looking at it as a fry pan bottom. There's other people watching to see whether it's going to break through the 50 or not. That adds that much more enhancement to the upside. So uptrends have bullish signals. There's your huge bearish engulfing signal. Completely engulfs the body. Now remember, it's just the body. A bearish engulfing signal doesn't have to engulf the shadows. Here's a strong sell signal. Look at your bearish left-right combo. But look what else happened. They took this up, slammed it. That tells you there's a lot of force to the downside. Same scenario over here on the hog chart. Look how it was rolling over. They took it up, and look where they failed. Right smack dab at the T-line and the 200, where was a very good entry to go short. As soon as it came back down through the open, that told you the bears are in control. Now you had a wave 1, wave 2, bearish J-hook pattern, wave 3. If this is wave 1, where do you think the next target is going to be? Somewhere down in this range. So you've got very good capabilities of seeing exactly where your targets are, or because of what type of patterns you're identifying. Riot, shooting star, doji, failure at the 50. Back here is a likely target. Fifi, observe the obvious. Which direction is this stock going? Pretty much in a downtrend. What happens every time it comes up to the 50? They sell it off. What's that tell you about investor sentiment? They're still selling this. You could be shorting this with the expectation they're still coming down to the bottom of the channel. So again, this is just putting the probabilities in your favor based upon what the existing trend and what the signals are telling you. What's this one telling you? You got a bearish J-hook pattern. If this opens lower, what we got going? At least a wave 1, wave 2, wave 3, and still more downside. CPE, same scenario. There was your gap up doji in the overbought condition. What's that tell you? Start looking for sell signals. What did you have the next day? A bearish engulfing signal. Did it confirm? Yeah, it opened lower and traded lower the next day. You could still be going short. Where was your expected target? Right here, which would coincide with filling this gap. Are smaller cap stocks or lower price stocks more volatile with extreme? No, not necessarily. If a $5 stock goes up 10% or a $50 stock goes up 10%, which one's more profitable? Or the other question is, what is heavier, a pound of lead or a pound of feathers? So there's that, again, bullish trade, came back and failed. Where did it fail? In the overbought condition. Let's get rid of this. You had a shooting star, a doji, and then a failure. Where's your next likely target? They could be bringing it all the way back down here. So the whole point of identifying the strength of a signal is we're trying to find the trades that are going to move the strongest during an uptrend or a downtrend. So there are candlestick signals that are telling you there's a change of investor sentiment. And then there's candlestick signals and patterns that tell you there's a strong change of investor sentiment. So using the old adage, you want to make hay while the sun shines. Well, if the uptrend's in progress, you want to find the trades that are going to probably act the strongest during that current uptrend. Okay, so that is the reason that we do the top rank signals and patterns, because not only does it clarify in your mind which signals to be concentrating on, but it kind of, I want to say, encapsulizes your mental process to say, hey, I can analyze which way the market's going. Now, which stocks or which positions do I want to go after that are going to make the most money during that current trend? So the first process of a decision is which way is the market going? All right. Anyways, here's the link for Saturday. It's scheduled for 10 to 2, but figure you're not going to get out of there before 4 o'clock. Because we want to really press home 3 major aspects. 1, identifying the strongest signals. 2, for those that want to trade options, we're going to quickly identify what strategies would be working the best for that trade. But 3, and this is the most important one, getting your mental process to where you're acclimated to identifying all the right things to make sure you're not only in a good trade, but a very strong trade. Georgie, wait till I tell Jim to do the double line. So the first question is, are there any general questions on candlestick analysis? Okay, if not, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. Blyfubo. BLI, our recommendation came because of the best friend signal. Now you're seeing a little bit of toppiness in the overbought condition. So this makes it very simple. Make this big. If I am long, I've got my safety stop just below today's low. Because if they failed at the 34 and they start trading down, where do you think they're heading to? Probably the T-line. You want to take profits. Fubo, same scenario. It looks like you're still in an uptrend, but you're in the overbought condition. I'd have a safety stop just below the lows for the last couple of days. JD.com, that was your shooting star doji in the overbought condition. When it opened lower today, that would have been a good time to take profits. Where do you think it's heading? Probably back here. What's the worst case scenario? If it turns around and heads back up, you can always buy it back if you still like it. AEHR. Notice what this one could not do. They couldn't close it below the T-line. Now you've got a little morning star signal, not real relevant up here, but probably implies that your 45 degree is still going to be heading in the right direction. EH, nice fry pan bottom. You stay long on this one. SOL. That is a doji shooting star gravestone doji in the overbought area. If this opens lower tomorrow, I'd close it out immediately. It has to open positive and trade positive. Pfizer, oh man, what happened there? Pfizer, you stay long as long as it stays above the T-line. You could buy it. It's just not going to be a very prolifically profitable trade. To go all the way from here to here, you're only looking at, what is that, 2.4%? So I wouldn't be buying the stock. If I thought it was going to move up here, I'd probably pick out a spread strategy where I have a lot less money exposed and a lot better leverage. STSA. Observe the obvious. As soon as it hit the 200s, run into trouble. If I was long, I'd have a safety stop right now at today's low. If it came back through this direction, it's pretty much telling us they're failing here. If it does open positive, yes, you could be buying it, but then you wouldn't. Then you'd have your stop at the 200. The Russell, still in a slow uptrend. SLQT, just stay long as this stays above the T-line. Again, notice how it's used the T-line as support. And I say notice that quite often the T-line is the exact level where trading stops. And it's not because everybody's buying on the T-line, because nobody has it. It just acts like a natural support and resistance level. Now, pin was one that we recommended because there was a fry pan bottom, and then as it executed, later that day, they announced that PayPal was going to buy, planning on buying pin interest at 70. Well, today it opened lower. There's always a statistical trading rule that if you have a big price move and the next day they open it lower and don't move, close it out. You can always buy it back when the statistics show that the buyers are still there. And I think after hours it's trading down here. So this was one of those where if we were buying calls in the morning, when it got up in this range, I think I could probably still do it. Maybe not. That's the 5-minute chart. Oh. All right, so that was the initial move. Did it real quick. One thing I've learned is if there's a big massive profit and you start seeing selling, take some profits. You could always buy it back. Where did it finally fail? When it came back down through the T-line that second time. That's the advantage of knowing that candlestick signals work on any time frame. So if you've moved that far away from the T-line and it didn't hold up with the expectation that the buyout was at 70, take some profits. That's the whole reason you're in the business in the first place, is to make a profit of this. AMED, did I do this one? No. I skipped this one. Apparently I did. Here is one that tells you when to get out of a trade. You had your left-right combo, bullish confirmation, bullish confirmation. Where would you have stopped out of this one? Right here at the T-line, because logic says if they come back down through the T-line, what's it telling you about your uptrend? It's not there. You would have closed this one out. Let's see, there's pin interest, all right. Apple, as we saw, is still moving in the right direction. Ford, still moving in the right direction. Notice once again how they've used the T-line as a support. LCID, this one needs to open positive and trade positive. If it opens lower, it's now kind of gone back into the no direction. And LRCX, bearish left-right combo. When they gap this one down today, if you were long, you closed it immediately. That's why when we see a bearish left-right combo or a bullish left-right combo, that's why it's ranked number 2 on our quantitative list, because you don't usually need confirmation, because the signal itself is so strong that if I was long and I saw this, even though it didn't close below the T-line, I would have closed out at least half, if not the full position. That's the strength of a bearish left-right combo. Nice fry pan bottom on Nautilus. You can be buying this one. Plug. Notice how when it hit the 200 it failed. You stay long, but it definitely needs to open positive. I'd have a safety stop at today's open, because if they traded it back down through there after failing up here, that means they're coming out of this one. SRNE, you could be, depending on the volume, you could be more apt to be going short on weakness tomorrow. Lithium, That one has to open positive and trade positive. If it opens lower, where do you think the next target's going to be? Back here at the 50. So they've come up through the breakout level. Now it looks like if they open it lower, that's where they're going to go back to see if it's going to act as support. Zoom, stay long, but it has to stay up above the T-line. Notice again, the 34 was acting as a little bit of a resistance level. Fuel cell. So if this opens lower tomorrow, it's coming back to test the T-line. I would probably close it out, because notice what happened up here. As soon as you had a big breakout type move, you had a bearish harami telling you the buying had stopped. Confirmed the next day. Now a shooting star doji type day. Stochastic's rolling over. This has to open positive and trade positive to stay in it. Apps, you just stay long. This has been working great for us. MGM. That one needed to open positive and trade positive, which it did. You stay long. Wynn Resorts. You could be getting ready to short this one. Tesla. Right now, all you can do is stay long as it stays above the T-line. CHPT. Notice kind of your doji sandwich off the 50. Where do you think your next logical target will be? They've broken the 50 up toward the 200. Advanced Micro, just stay long. Ever since they did the best friend gap up through the 50, which is also this downtrend, you just stay long until you see a sell signal. Wish, that one, as soon as it hit the 50 and backed off, if this opens lower tomorrow, you close it out because they've failed. If you're thinking of buying, you wait for it to break back up through the 50. Lows, just stay long. Home Depot. Home Depot, just stay long. Look at your doji gap up breakout. Boeing, that's kind of a nothing chart. Well, I didn't say that. That's more now of a short, or if you're short, you stay short. Observe the obvious. Look where all the indecisive trading occurred, right up here at the 200. Notice when they opened it lower, they came right back up to the 200 and failed, and where did they finally close? Back below the T-line. That was a good confirmation that you could get ready to go short on this one. If you had gone long, you would have closed it out today. That's kind of a nothing chart. Not enough there to grasp onto. Snap wouldn't be long or short. That's sideways. So a shooting star at the bottom of the trend indicates a reversal. Marcelo, I hope you have read your High Profit Candlestick Patterns book. What is a shooting star signal at the bottom of a trend? So we did pins, overstock. You had a bullish doji sandwich, but a bearish engulfing signal. And where did it occur? Right about the same levels they topped out before. If you were long, you would have closed it out today. If you stayed long, it has to open positive and trade positive. If it trades back below today's low, you want to close it out right away. It's not a trending stock anymore. What did I do? pins at 59.10 after hours. All right, so it's down here. That's, yep. How much more accurate is a buy below the 200? It's not the, yeah, it's, let's say, more probabilities that it's going to work, because the Japanese rice traders have a very simple philosophy. If you see a candlestick buy signal in the oversold condition, that's a probably good indication you've seen a change of investor sentiment. If you see a candlestick sell signal in the overbought condition, a good probability you're heading back down. If you see a candlestick buy signal in the overbought condition, it doesn't mean anything. Or if you see a candlestick sell signal in the oversold area, it doesn't mean anything, or doesn't mean as much. Roku has to open positive and trade positive to stay above the T-line. If it opens lower, now what do you have? A left-right combo followed by a bearish doji sandwich. That means that uptrend is over. Yeah, just because you see a candlestick formation that looks like a signal doesn't necessarily mean it's a signal. It's just a formation. But if it's a signal when it's occurring in the appropriate area of a trend, meaning the overbought or oversold area. Johnson and Johnson. I typed that off into Never Never Land. It's going to keep moving up. Oh boy, you're running out of steam. That's not a real great looking chart. If this opened lower and started trading lower, I'd find something else. Oh, Snap is down after hours. All right. Well, here's a very good illustration of if you're long and it closes below the T-line, you close it out. Darren, that's exactly right. If you see a shooting star in the oversold area, that's an inverted hammer, which again is a very high probability trade situation. Okay, Becky just put in the link again. The reason we kind of emphasize learning the top rank signals and patterns is all ships are going to rise in a rising tide. What we're looking for is the ships that are rising a heck of a lot faster than the rest of them during that rising tide. All right, let's see, kept you way past your bedtime. We will see everybody bright and early. Is Croc called a kicker? All right. Late request. No. A kicker signal is where it opens positive and trades positive. That's still kind of not telling you there's a heck of a lot of bullish sentiment just yet. Now, if it trades back up above this level tomorrow, yes, now you've got more of a bullish flutter kicker type signal. And so we're looking for positive trading on something like this because of that strong buying consolidation. Now we look for the uptrend. So these are just kind of simple observations you can make based upon what human nature normally does as far as creating patterns. So with that, everybody have a good evening. We'll see you in the chat rooms tomorrow. We'll see you then.